Hey guys, Max here, and yesterday was actually a red day in the markets, the first one for the last week basically. Now, those stupid irrational hopes that Russia was going to end the war early, as they claimed to be pulling away from Kiev, were of course unwarranted. The gains that the markets made on that assumption were lost as Russia increased their bombardment of Kiev yesterday and continued to fight around the city as well. Chernihiv also saw the same thing. It's a city to the north of Kiev, which Russia said they would no longer be targeting, but it was also attacked literally one day after Russia said it wouldn't be. Now, I of course said yesterday that the market's gain-in on this Russian claim of de-escalation was stupid and irrational, and it took literally one day for that to be proven true. Once again, I implore everyone not to make investment decisions based on what the Russian state says. Now, the markets themselves, what actually happened? Well, the S&P 500 was down 0.6% and the Nasdaq was down 1.1%. In reality, though, it was actually worse than that for most of the day. There were no green moments at all for the S&P 500 or the Nasdaq. The S&P actually dropped as far as more than 1%, but then saw a small recovery before the close. Now, in Europe, markets were similar, just a little bit less volatile as you might expect. The FTSE 100 saw pretty much no moves and the Stoxx 600 was down 0.4%. The US dollar actually fell a bit as well, 0.4%. Nothing major though, just a small blip, and comparatively, compared to where the dollar has been in recent months and over the last few years, it's still very strong. Now, bonds actually saw quite a tame day for once. The US 10-year Treasury yield was down 4 basis points and it now sits at 2.35%, still far higher than the vast majority of the last 3 years, don't forget. The yield curve is no longer inverted, but volatility means that that is likely to happen. We should expect to see it again within a week or a month at most. Within 6 months, we should really expect the yield curve to be inverted consistently by a large margin as well. The German and British bond yields didn't really move much either. Now, oil prices rose 3% to $107 a barrel, paring their losses from the days before, and that's for WTI crude oil. But this morning, on rumors that the US will release their strategic reserve of oil, prices fell 5%, so it's down a little bit more, which is nice to see. Hopefully, we get more downwards movement for oil prices. We just got data out of Europe for inflation, and the oil and gas shocks are wreaking absolute havoc on that entire continent. Now, we will talk about that more in a moment, of course. As of right now, though, Brent crude oil is sitting at around about $106 a barrel. It is also worth noting that it isn't confirmed that the US will release oil from their strategic reserves or how much will be released, but early reports suggest that it could be as much as 180 million barrels, the largest release in the 50-year history that this reserve has existed. Now, in the grand scheme of things though, 180 million barrels isn't actually that much. The US alone is currently producing about 11 million barrels every day, but we could see a lot of other countries do the same thing and follow the US's move. If we see other countries like France, the UK and Japan also release their strategic oil reserves, then we could triple that amount of oil being released, and that would ease pressure on oil prices around the world for a couple of months. This isn't a long-term solution though, let's not forget. Now, gold prices were up 1.1% today to $1,940 an ounce. Gold is still looking very strong. There are, of course, still loads of rumors going around about a gold-backed ruble, some new gold petrodollar currency, but that is all hearsay. There is nothing concrete around gold and these new currencies being developed or anything like that as of yet. Now, in the crypto world, there have been no major shifts, but slight gains across the board for the altcoin market especially. Bitcoin and Ethereum are both still sitting at $47,000 and $3,400 each. No moves at all really. Altcoins though are up for the most part, really anywhere from between 1 and 15%. It was actually quite a strong day for that market. It's hard to say why. There was no real huge news about that market. There is one development that the US now has its first director of the National Cryptocurrency Enforcement Team, which should help to increase the legitimacy of the market a bit, help to curb scams and rug pulls and things like that. But to be perfectly honest, I doubt that news alone is enough to send the trillion-dollar altcoin market up 5%. Now, I mentioned in passing that the EU are struggling with inflation, and they really are. We got new data out yesterday, and it is awful. There are just no other words for it. All over the continent, inflation spiked a ridiculous amount, far higher than any expectations. Now, of course, Europe followed quantitative easing just like the US did, but on a slightly smaller scale, but they had that same sort of reckless government spending, reckless money printing, and stimulating of inflation. Now, the continent got away with it slightly. They seem to be about 3 to 6 months behind the inflation cycle of the US. When the US had 7% inflation, they had 4 or 5, things like that, so politicians could mostly ignore it. The European Central Bank, for example, has basically been the worst central bank in the world, even worse than the Fed. Yes, that is possible, and they still to this day claim that inflation is transitory. Lagarde, the woman who runs that, ought to be in jail, quite frankly. So inflation was already bad in Europe, but it was a few months behind where the US was, and just mostly being ignored by politicians and economists because it's their fault. But the war in Ukraine sent another huge major supply side shock through the entire continent, and now everything is falling apart. Really, this topic needs a video all of its own because this will be such a major hit to Europe's economy. The consequences are far too many to list in this video alone, so I will be putting out a full-length video purely about this topic. But for now, we saw huge spikes in natural gas and oil prices instantly caused by the Russian invasion of Ukraine, as we all know at this point. Now this then in turn caused prices all over the continent to rise above where inflation is for the US. Spain, for example, went from inflation of 6% 1 month ago to 10% this month. That's a 1 month change. Germany's inflation has gone up to 7.6% as of yesterday. Belgium's inflation has gone up to 8.3%. Lithuania is seeing inflation of almost 15%. And with these crazy high, terrifying inflation numbers, growth forecasts are being slashed across the board for European countries too. Germany, just 1 month ago, was predicting GDP growth for 2022 of 4.6%, a really strong number as a result of that COVID bounce back, people getting back out into the world and spending their money again. Today, that number has been slashed to 1.8%. That is an absolutely monstrous cut, and it's basically equivalent to the country already being put in recession. And let's be honest, that growth forecast will keep getting cut every month as energy price spikes keep happening. Now, I'm not meaning to single out Germany here, but it is the biggest, most important country in Europe, but every European country will struggle just like Germany will. This goes for those in and outside the EU as well, because natural gas and oil prices are so instrumental to pretty much every economy in Europe. We have the exact same situation here in the UK. We got our data out a week or so ago, and our version of the Bureau for Labour Statistics literally said that if it weren't for the COVID bounce back effects, this oil and gas price shock would have already put us in a recession. Now, it is hard to explain just how serious this is, especially in short market recap videos where I'm trying to be concise. So a full-length video, as I said earlier, on this topic will be coming out in a few days, looking at the chaos in Europe, why this has happened, if it really is all the fault of Putin, hint, it's not, and a bunch of other stuff. So make sure to subscribe so you don't miss out on that. There's also going to be a video coming out on Stoic Crypto explaining the Ronin bridge hack later today, where $600 million of crypto was stolen last week and no one even noticed until just a few days ago. Tomorrow as well, there will be a video coming out on Stoic Politics, looking at the breakaway Georgian region that is suddenly seeking to join Russia and just what might be going on over there. So make sure to go down to the description and subscribe to those two channels so you don't miss out. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Thanks for watching, stay stoic, until next time.